George, where do I hide? Where do I find yield right now?
Good morning, Tom. Good morning, team. Thanks for having me on the show. As you point out, and as Jonathan mentioned before, where do you hide? Where do you look for yield? How do you protect your capital? The bottom line is we're in a bear market for bonds right now. Bond
Thank
yields are
you.
moving higher. You guys have been talking about it all morning, and it's a trend that's likely to continue, we think, throughout most
Then
of
what do
this
you
year.
do? I mean, this
Now,
is so,
Jonathan,
George,
yep.
this is so important. All of the strategists come in and they rationalize lower price, higher yield. You have the courage to say we're in a bear market. What does a yield investor do? Do they only buy 2 years?
A yield investor stays anchored at the front end of the curve. You want to stay in short duration bonds. You want to go down as low in credit quality as you possibly can. You want to look at loans because they have a floating rate structure. They're directly geared to economic recovery. High yield, which is in a sector that Tom, you and I have had many conversations about in the past, but cyclically is very well exposed within the domestic, once again, within the domestic and global economy for that matter, has high enough both nominal and real yields to offset the rise in yields we're seeing in treasuries. So the capital protection strategy works there. You can also look outside the U.S. Non-dollar bonds are actually outperforming U.S. bonds pretty meaningfully. Now, you may not be immune from capital losses, but you can certainly diffuse the capital loss. And in some instances, on a hedged basis, bringing that money back to dollars can put you in a positive yield strategy. So the central message, you have to cast your net as wide as possible. You have to be diversified, and you really have to focus and anchor your position in relatively short portions of the curve. Jonathan mentioned the 2-year. We would say you want to be kind of 2 years and in. There, we would incrementally extend a little bit further out, but you have to do that very carefully. You have to make sure that the companies you're exposed to, the credits you're exposed to, can offset that upward drift, that upward push in yields. We can find places to do that, but it's a challenge. You have to look very carefully, and you have to be very disciplined in your portfolio construction.
So, George,